Good morning and happy Monday, folks. Bitcoin is up nearly 10%, and we know that that is in part thanks to increased chances of a Fed rate cut. But there is a rumor going around about where this massive sell-off that put us down nearly 35% has come from. So we're going to dive into that in just a second. But first of all, take a look at Bitcoin, currently trading at a price of $87,999. We are just scraping back at 90K, which is nice to say, although obviously pretty small in the context of that massive $35,000 sell-up. Currently up about 9.24% from the lows that we put in on Friday. As you can see, once again, shorts getting liquidated, about $150 million worth. Nothing massive, of course, but once again, people are jumping in on these green candles with leverage, trading with money that they don't have, and that increases the chances of the entire thing unraveling again. On the daily, we are up to nearly $2 billion worth of long liquidation risk. Remember, or for the uninitiated, long liquidation risk means that if prices pull back to a certain level, these positions, or at least some of them, are going to become liquidated. When a leveraged long position is liquidated, the exchange sells that for you against your will because you're trading with money that you borrowed from the exchange, and that increases sell pressure very rapidly on the market, which can lead to overextensions of these moves, like this massive 35% move that we saw starting at the beginning of October with that massive historic $19 billion liquidation event. And there's a rumor going around as to where this all started. Digital asset treasury firms, that is DATs, are facing pressure from the MSCI index based on exclusion. And this essentially is telling us that, first of all, MSCI is the company that runs major indices, right? It used to be attached to Morgan Stanley, but now it is completely independent. You can see they've got big market leading indices like the MSCI World Index, etc., etc. But companies holding digital assets like Bitcoin on their treasury, on their balance sheet, in their treasury, are now facing exclusion from the MSCI because, and I quote, they are behaving more like funds than they are like companies. Digital asset treasury companies, DATs, are facing a critical period, potentially encountering meaningful pressure if MSCI, a leading global index provider, decides to exclude them from its indices next January. MSCI announced it was consulting with the investment community about the possibility of excluding companies with balance sheets comprised of over 50% digital assets, such as Bitcoin. Some feedback suggests that these companies exhibit characteristics similar to investment funds, which are currently not eligible for index inclusion. Adding Bitcoin to the balance sheet of a company has become sort of the feather in the cap, right? It's become the popular thing to do. But I think it's important to remember that a lot of these big institutions going out and buying Bitcoin to make themselves look better because Bitcoin keeps going up don't necessarily have the same core belief in the long-term performance of that you do, right? They're buying it essentially for the reason that it keeps going up and it makes the company look better. They're not necessarily buying it because they actually believe in the underlying technology. And why is that a problem? Because then they become fickle sellers when information like this starts coming up. And there's a rumor going around currently that this is what kicked off the start of that big liquidation event that we saw in October. Obviously, the fuel that really kicked that along was excessive leverage in the market. That's why we saw such a big and such an aggressive move to the downside. It's what I mentioned earlier about leverage traders getting forced out of their positions, forced to sell, forced to dump supply onto the markets. But we know that there was spot selling around that, and there has been spot selling since as well, which is very important to pay attention to if you're looking at this long term from a bird's eye. And this might well play into that whole rhetoric. Now, FASB is the Financial Accounting Standards Board, and they have a mandate that certain crypto assets need to be measured at fair value with changes reported in net income. So this means, and I've got an article here which is guidance written by KPMG, if the carrying amount of an intangible asset exceeds its fair value, an entity shall recognize an impairment loss in an amount equal to that excess. After an impairment loss is recognized, the adjusted carrying amount of the intangible asset shall be its new accounting basis. And this essentially means that right now we've got a whole load of DATs, right? Companies holding Bitcoin on the balance sheet that, if we don't see prices recovering soon, have to report a loss at year end. And that once again makes it much less attractive for these companies to keep holding on to that Bitcoin. Why is that a problem? Because it raises the possibility that these companies then start selling, and we see an unwinding of the rhetoric that institutions love buying Bitcoin, which is something that has been definitely driving the market, particularly on this bull run. Meet Kevin made an excellent numerical breakdown of this. Listen to what he has to say, in particular about MicroStrategy.
Probably because of Bitcoin gains in the last quarter, so they're basically losing money. But they're, just from holding Bitcoin, 24,000 Bitcoin, they're about to lose $680 million, which is, 3,688% of their net income. MicroStrategy showed net income of $2.7 billion. Well, they're about to show a loss of $18 billion. Again, if Bitcoin stays under 85,000, it's at 84,000 right now. So best case scenario, this just recovers, right? And this doesn't end up becoming a larger issue.
So there you go. Not a great time to be a company holding Bitcoin on the balance sheet. Number one, because now you're facing potential exclusion from MSCI indices. And number two, because you're actually going to have to show a loss from that Bitcoin holding if this dip persists. And unfortunately, what that means is it increases the likelihood that some of these companies start selling Bitcoin because of that. Unlikely in the case of MicroStrategy, but then you also have to factor in the situation there where they're essentially borrowing money from MicroStrategy stock to go out and buy more Bitcoin to increase the value of MicroStrategy stock. So you've got this whole snowballing effect, which could potentially be thrown into jeopardy by these two factors that we've seen today. But in any case, chances of a rate cut up to 70%, 25 basis point rate cut at the December meeting, up to 70%, thanks to Williams. We covered that yesterday. Williams saying there is room for further adjustment. Thank you, Williams. And the markets are enjoying that for now. I think, as I discussed yesterday, this is clearly the Fed making moves to step in and protect the stock market to prevent a even worse situation that we could see happening there if things unravel. Bitcoin liked it too, although I would be wary of a pump like this, particularly because we can see, as always, there is still retail tendency to jump in on that with too much leverage. There is long side liquidation risk to the downside, but we'll take it. Okay, we're up nearly 10%, and of course down to lows of something like 35%. That puts us now down about 30% from the all-time highs. Let's see if this can be sustained, but of course wary of the downside for the reasons that I just mentioned. Not financial advice, purely my opinion. Hope you found some of that interesting. Thank you so much for watching. Plenty more to come. Catch you in the next one.